stablecoins are kind of the gateway drug to crypto because they are the ones that enable tokenized cash. They enable you to think about all the other things that could be tokenized. Because behind a stablecoin is really, you can think of it as like a money market fund. Hey, if I can tokenize this money market fund and I can spend against it, what else could you do? What's going to come next? That's where you think about it. How do we tokenize public securities? How do we take what otherwise would be a fund? And the reason I talk about funds and ETFs is like, they're very difficult subscription processes. It's like eating glass. We got to watch stablecoins grow up from zero to where they are today. There's a lot of ambiguity in that time. Like, what's going to drive stablecoin growth? It's largely been DeFi. It's largely been the trading of digital assets. But then throughout that time, kind of far before it was cool, there was a number of companies from Bridge to Rain to Rail that were building this new architecture around the payment stack.
So hello and welcome, and we're here at Holistic Investments, and I'm your host, Constantin Kogan, and I'm excited to have an amazing guest today, Wyatt Lonergan, who's a GP of VanEck Ventures. Hi, Wyatt.
Hey, thank you for having me.
Thank you for being here. I'm really excited. I know we've been planning for quite a while, and you have a lot of great things to introduce here. Like, I know you've just started $40 million new, fresh VC fund, so new capital will flow from a great institutional player. You guys have $130 billion AUM. Like, I know more than 60 plus ETFs rolled out. You've been a traditional institution that is now pioneer in the digital assets. So we have a lot to talk about, right? So, but before, traditionally, we have to throw a legal disclaimer so this content is for informational purpose, and you should not construe any such information as legal, tax, investment, financial, or any other advice. Now that we're off the hook, we can talk about anything. Before we go to all this fun announcements, and I want to learn about you first, right? Like I've seen like you have an amazing career. You have been a seed investor at Circle Venture. You've been all around the world, but I want to talk about Wyatt before Web3. What happened to you in your life that you got interested in blockchain and Web3?
Yeah, it's a great question. Well, I spent the early, kind of going way back when I was in high school, I studied Chinese language, and I loved the idea of language, but I ended up really falling in love with Mandarin, traveling abroad to China, and really seeing a completely different side of the world starting from the age of 14. So from 14 to 18, I went to China every year for 2.5 weeks. I did a homestay. And that led me to studying abroad in Hong Kong because I'd already been all over mainland China. I wanted to see something new. And my love of Hong Kong just randomly led to me getting a job in Shenzhen. And that is really what kickstarted my career because at that point in time, I was very interested in all things consumer. My father was in the clothing business. I loved really well-crafted and designed things, and I wanted to apply that more to technology, to e-commerce. And so e-commerce was kind of my first love as an entrepreneur. And ended up actually starting a bike company.
Oh, yes, I've seen that.
But prior to the bike company, I worked at a large U.S. toy company. I ended up managing their product development team in China at a very young age, probably by the time I was like 23. I then launched their e-commerce business on Tmall and Taobao. Co-ran the marketing team for that line. So I got to learn how to take a product from an idea to shipping it, to actually selling it to a customer and building a relationship. So brand has always been very, very important to me. It's interesting because my crypto journey kind of began because crypto was really popular in China. Bitcoin was really popular. So people were always talking about it. And as somebody that's always just loved tech companies and loved brands, like, at the time when I was starting my company, Warby Parker and the whole D2C revolution was taking off, Casper. So I was always watching these companies, always staying in touch with kind of the New York tech scene. And crypto kept coming up as this like weird thing. Some people would dismiss it, some people would love it. And I had a really diverse group of friends living out there. It was like, it was not typical to New York. It was all over the world, right? So people brought a lot of different perspectives. And it was really just through that, I started reading about Bitcoin. I started reading about crypto. And the thing that fascinated me the most was this idea of like capital coordination. Because I always thought like being an entrepreneur is great. I kind of have ADD though, and I'm interested in a lot of different things. And, maybe I want to be an investor. But like, I don't know if I have any skills to be an investor. And so I started, you got to see what happened with the ETH ICO. And I started really following this idea of like internet capital formation.
Mm-hmm.
And when I decided to leave my company, which was mainly due to like a co-founder conflict, it happens. That was a huge learning point in my life. I'm really glad it happened. I went to a happy hour one night and I met the team at Seed Invest. And we started talking about internet capital formation because that's what they were doing. They were a broker dealer, one of the first who actually contributed to the Jobs Act,
Mm-hmm.
which enabled non-accredited investors to invest in private companies, specifically tech companies, and really pioneered all of the different regulations from Reg CF, which now you can raise up to 5 million, Reg A plus tier 2, you can raise up to 75,
Mm-hmm.
and then you can do that in combinations with things like Reg D, which you can raise from accredited investors. So they had this really kind of knowledge and kind of on the regulatory and compliance side. And in these conversations, I was throwing out these wild ideas like, well, yeah, but what if we were able to kind of emulate what the Ethereum ICO did? What if we could use blockchains to do this? Stablecoins didn't exist at the time. And it was so funny because I was like, they probably think I'm crazy. But in reality, they had a term sheet to be acquired by Circle, and I didn't know about it. So they ended up hiring me. And I was kind of the crazy crypto guy who was just obsessed with all these companies, who was reading all the white papers. And so they kind of just let me do that while Circle was acquiring us. And then I'll never forget, I got taken with Ryan, who's the co-founder and CEO of Seed Invest, to the Security Token Conference. I think it was like October 4th, 2018. We got to watch Jeremy Allaire announce on stage that they were acquiring us. By that point, I knew, but it was maybe a couple days before. And then, yeah, everything changed. It was like I got to really just be thrust into crypto 24/7, and I just ran at that opportunity. But I think it starts from like being curious and kind of following that. I said I was ADD. Like I am intellectually ADD. I love learning about new things, and it took me to China. It took me to being an entrepreneur. It took me to want to be potentially a venture capitalist.
Mm-hmm.
And then I found this concept and I was just hooked, and I've been working on it ever since.
Well, it's incredible. You definitely have a curiosity for life that's felt. But talk about like I would say the transition between the Circle Ventures and now where you are in VanEck Ventures. Like what did you learn? What lessons did you learn in Circle Ventures that you are maybe implementing or improving in VanEck Ventures?
Yeah. Well, maybe very quickly, like how Circle Ventures ended up happening was as I got over to Seed Invest, again, being the crazy crypto guy, I was like, we should build like a blockchain enabled version of Seed Invest. And so we tried to do that. I pitched the board, ended up getting money and a team. I got to lead out that initiative. And basically the regulators came back and were like, absolutely not. And so I spent all this time running around crypto, meeting with all the CEOs. I met with Anatoly when they were doing a sale for 6 cents for Solana. I met with Polkadot. I met with Near. I met with like every single major protocol I met with. And throughout that, I had to become friends with the VCs, and I had to become friends with the founders. And so I built a really great network. So when we decided to move away from that product and really focus on all things USDC, DeFi summer happened, and it was really clear that we needed to start investing in this ecosystem. My now partner at VanEck Ventures, Juan, who I've been investing with for the last 4 years, had the same idea. So he pitched Jeremy Allaire, and Jeremy Allaire goes, well, you should talk to Wyatt, because we asked Wyatt to do this. And the two of us, it's kind of, we haven't looked back. How things have changed is that a corporate venture fund is always set up to really think first and foremost about the strategic value a founder and their team are going to provide to the corporate. And so in this case, can we invest in these teams like Maple Finance, like Rain Cards? And then can in turn they grow our core product, and can we find ways to collaborate? Can we build a strategic relationship? Now at VanEck, we are a for-profit fund. We have outside investors. VanEck is our co-investor and co-partner in the fund. And so I think there's strategic benefit, but we first and foremost look for the best teams that we think can drive a profit for ourselves and for our investors. And then we find ways to basically take the firm and the power that the firm has, the network that we've built, the products that we want to launch, the expertise we have on the regulatory side, and apply that to our portfolio company kind of as a superpower. So there's three partners, myself, Juan, and Jan VanEck, who's the CEO of VanEck. But then there's, hundreds of people that kind of get to work behind the scenes, maybe not hundreds, but 30 plus people who work on crypto products, who get to work on our fund. And that enables us as GPs to be laser focused on finding the right people and helping them succeed.
And this is impressive because, First of all, not many people knew that there's VanEck has a venture arm, right? And most of the people know VanEck as a traditional institution with you're present in 30 plus countries. Like you have I don't know how many employees you have right now at this point.
I want to say it's like 400.
400.
Yeah.
Okay. So, you guys also known as one of the pioneers in the ETF space, right? And by the way, not only in crypto ETF, like gold and multiple others. So maybe talk a little bit about the culture, inside the firm. Like, how do you collaborate? You mentioned there's hundreds of people behind your back, and this is obviously exciting. I think it gives you unfair advantage and the knowledge, the collective knowledge base that not many firms can actually talk about and have this advantage. So how do you feel being supported by this giants also behind your back?
Yeah, I mean, it's awesome. We are the least TradFi firm though. It is very entrepreneurial. And I think that all starts with Jan and just the way that he drives the culture of the firm. So every Wednesday we get on a call, there's 30 something of us from all over the world who work on various crypto products, from funds to ETFs to new tokenized products we're launching to companies we're incubating to other partner companies that we have. Our entrepreneurs get to come in, talk to everybody, meet everyone. So the culture is, intuitively entrepreneurial. And so I think that's where it starts. But if you go all the way back, VanEck has been innovating in and around these areas actually for a long time. The firm started off by creating the first international gold fund. So when Jan heard about Bitcoin, he was like, is this going to be the thing that's going to disrupt gold? Well, then we got to learn about it, right? It wasn't this Bitcoin's this digital pet rock, who cares? There was a curiosity and a respect for what it might become. In the same way that I think he views tokenization and what ETFs did to asset management, right? And so we're seeing these new form factors pop up. And if you're dismissive, if you just write them off and say you know what, Athena is just a synthetic stablecoin or a hedge fund. I'm never going to pay attention to this thing. Well, you're going to miss the innovation that's really happening around the space. And so, as a firm, we operate multiple funds. We have a hedge fund who invests in public equities and crypto tokens. We have something I think I heard today 30 crypto ETFs, mainly out of Europe. We have $6 billion under management on the crypto side. We've had a research team for years. And so the final missing piece was kind of the venture fund. Also, we have the VanEck intern. Shout out to the VanEck intern on X. The final missing piece was having an early stage fund such that we could partner with a founder really throughout the entire life cycle. We could be the first check into the company. We can scale through our liquid fund. We'll create more vehicles over time as well. And then we can continue to double down on them through our actively managed products like Node, or through different, single asset ETFs or other products that will come out in the future. So yeah, it's weird in that a lot of asset management firms, I think, were very late to crypto. VanEck was actually very early. So we were one of the first firms to file for the Bitcoin spot ETFs in 2017. Yeah, we just had to wait 7 years, but I think that's kudos to Jan. That's kudos to how the firm is run.
Well, I think you also paved this path for others, because there's so much, people don't understand how much work it was back in the days to just educate regulators, right? Now that you have those tens of other ETFs, so it's easy, right? Much easier. So you have already framework that is built. So yeah, kudos to what you did. I want to talk about your investment thesis, right? So obviously you have a unique approach, every VC have their own thesis of what they're looking for from the founders. So anyone who's looking and saying that, oh my God, I have to pitch, to VanEck, what should be their approach? What verticals are you looking at? What are you looking from the founders? Maybe some secret sauce, how people should approach you. What would be the right way to do it?
I don't think there's any right way. I think founders just have to be themselves. And we love meeting a team that's just really passionate about what they're doing and, can tell you their story in a really concise way. And when you know. I get energized in a call when I meet a founder that I'm really excited about. Or we have a one-on-one meeting. Sometimes we'll walk away and be like, all right, we got to do this. But let's figure out how we can do this. So there's no magic sauce. There's no secret ingredient here, unfortunately. But yeah, what gets us excited? So I would say, transitioning from Circle to VanEck, we got to watch stablecoins grow up from zero to where they are today. And there's a lot of ambiguity in that time. What's going to drive stablecoin growth? Well, it's largely been DeFi. It's largely been the trading of digital assets. But then throughout that time, kind of far before it was cool, there was a number of companies from Bridge to Rain to Rail, Privy, that were building this new architecture around the payment stack. And that is also starting to now move into the, I would say, the tokenized asset stack or asset management stack as well. And at the crux of that really is that we're moving from an account-based structure to a wallet-based structure. Mm-hmm. And once you have a wallet-based structure, there's a set of tools you can kind of build around it that can enable kind of the magic of stablecoins, which is that, you own and control your money. You can move it around the world at the speed of a text message for a fraction of a penny. You can use it in DeFi. You can invest it. And now we're seeing a lot more assets come to market. But that's kind of the crux of the thesis. So coming from Circle, it was clear to us that a lot of the power in the unit economics, the power of negotiation in the unit economics was going to shift up the stack. We saw firsthand, everyone's coming to Circle and saying, I drive USDC growth, you pay me, right? Mm-hmm. And Circle and Tether have done a very good job of defending that as the stablecoin duopoly, but that shift is starting to change. And we predicted that would come. I think it's come a lot faster. Part of that is Genius Act. Part of that is Trump. We had a complete regulatory 180 and boom, all of a sudden crypto is here, it's mainstream, and every good idea is going to be competed on.
Mm. But here's the thing, do you consider that in a foreseeable future, Tether or Circle will lose their positions as number one, number two?
I think it's entirely possible. Yeah.
Interesting.
And I say that as a Circle shareholder. I mean, I'm optimistic about what Circle can do. But, at roughly 300 billion of stablecoins, oh yeah, it's all up for grabs. And so we don't really know which model is going to win, but what we're starting to see is this shift towards a layer in which you are going to have to be, so take something like M0 or Agora or Athena or open issuance by Stripe, where either I'm going to cut a deal directly with you and you're going to earn on the yield that the net interest margin for what you drive in terms of distribution, or I'm going to white label a stablecoin for you. But either way, stablecoins are starting to become a very low margin commoditized product that will likely be used as an acquisition tool. So if you look at what Coinbase is doing today, right, they are giving users 4% for parking USDC on their platform. Who's paying for that? Circle's paying for that, right? Because they have an agreement. And so Circle will pass over that yield and pay for it. Coinbase isn't making a lot of money on it. They're probably scraping bips. But that's a really sticky product that you can then use to upsell.
It's an acquisition tool, essentially.
Yes, it's an acquisition tool. So we view, I think a lot of the industry views stablecoins through this net interest margin capture because of Tether. But, yes, they have deep liquidity. They have, the Lindy and network effects. Mm-hmm. But, look, what got announced today, like Stripe and Tempo, Green Oaks, Thrive Capital, Ribbit, Sequoia have entered the chat.
$500 million
in size.
Insane.
Yeah.
With on a $5 billion valuation, it was a good surprise.
I'm seeing more and more founders that are coming from fintech with knowledge of that world who have a good understanding of stablecoins. And most of the times they're not going to the typical crypto capital markets, right? They're going to now that increasingly they're going to be going to folks like Founders Fund, who's definitely done a lot in crypto, but Sequoia, right? Thrive, those guys are going to get involved because crypto is increasingly becoming a fintech product. So that's another kind of core area for us was okay, value is going to shift up the stack. It's going to be the middleware layer. It's going to be the distribution layer. What middleware is missing today? In payments, we felt like it was having a clearinghouse around stablecoins. We still think there's a huge opportunity around the B2B payment space, specifically with messaging and really connecting the old systems like Swift with the new systems like stablecoins, creating kind of smart routing around that. In asset management, it was taking existing assets like publicly traded securities and enabling them to be tokenized and distributed in DeFi in a compliant way. Capital formation, so companies like Legion that we've backed, and net new tokenized assets. So those could be what would typically be a private credit fund, what would typically be an ETF, or in some cases, actually what we think are kind of the next commodities. Those could be things like compute, Wi-Fi. And so there's a lot of interesting things around that, but where we see an opportunity to own the distribution layer, we're going to go invest there. Where we see that there's actually a missing piece to create distribution, that's kind of where we go for the middleware. We tend to not invest in the underlying blockchains, and we don't have positions in stablecoin issuers either.
And so if we were to pick one company, I know it's hard, you talk
They're all my favorite.
Yeah, of course. I'm not asking you to pick the favorite. It's like pick a favorite kid. It's very tough. Let's talk about Legion. You mentioned that, right? So I want to talk about what made you if you would recall the first conversation and then throughout, I'm sure you had like multiple follow-up calls.
Yeah.
What made you say yes to this project?
So I always actually, well, first of all, I was kind of hunting them. It wasn't the other way around.
Okay.
As every good investment should be. I found out about them through a podcast. I think I was listening to like Laura Shin's podcast. The Maddie, the founder, was on. And again, I had built a very similar, I've been part of a very similar business at Seed Invest and Circle. And, credit to Circle. They were super early with this vision of like, we're going to create a marketplace for capital formation. We're going to own an exchange. We're going to have a stable coin, and we're going to build all the infrastructure in between that. So like totally correct thesis, just 5-6 years too early. And so, I'm constantly looking in the market, who are the people building these things that we thought really deeply about at Circle? And that is probably one of the most common themes across our portfolio is like everything that we wanted to do, we are investing in today. Mm-hmm. So I love that. Like, even 4 years ago, Juan and I were like, let's back this company, let's do this thing, right? And maybe they were just 4 years too early. And now we're seeing new versions of those companies come out, learning from those mistakes.
But what made you, okay, so when you're listening to Laura Shin podcast, right? And you're looking at Maddie, like, like, wow, he's an impressive CEO. But still, like, there should be something that draw your attention that like, okay, well, I would invest in that. What was this inflection point?
I think it was first their understanding of kind of the thesis that was ahead of them of like how these marketplaces are going to merge. And then it's also kind of that human connection. Like when we got on a call with Maddie and Fab, again, it was kind of like, all right, these are the guys. Like they've thought about every little bit of this stack. And they've already tested a bunch of hypotheses and they have some new ones. So like, we've tested a bunch of hypotheses too, but like they took it a step further. Mm-hmm. There were some certain things where we're kind of like, man, how do you properly select the right investors? How do you ensure you don't have mercenary capital on this? And like, they're like, oh yeah, we've been doing this for a year. It's called Legion Score. We take in your GitHub, your social media, all your wallets. We present a score. And I'm just like, God, that's brilliant. Like, we wanted to solve for these things, but I didn't know how we could. Now you can. Mm-hmm. How do you sort through so many different companies? Well, now you have all these different AI tools that can review and quickly show them these things. And then of course you have stablecoins. You have really great wallet infrastructure. You have fast blockchains, all this stuff we didn't have before. And so recently Legion conducted a sale. They had $2 million allocation. They ended up 100x oversubscribing it in 24 hours. $200 million came to their smart contracts. You can only do that via stablecoins. So we didn't even have that stuff, 5-6 years ago. We tried to do this. And separately, I look for teams where it's like, as investors, our job is just enable them in any way possible to be kind of sparring partners, design partners. But also, thanks to the great network that VanEck has built and the network that Juan and I built at Circle, we also, can create interesting connections for them. And it's our job just to open the door. We can't close the deal. And so you always look for people that you feel like, all right, if I'm going to open a door, they're going to close the deal. And those guys, like right away, like every connection we made. So we ended up introducing them to Brevin Howard, who's the co-lead on the round. Immediately, we get a call from them. They're like, we have to do this. And then you introduce them to the next partner and I get on a call with them and they're equally excited. And so momentum builds. And you see that with great founders. They just get people excited really quickly.
That's a great, I would say, outlook. And you called stablecoins like tokenized cash. Mm-hmm. Like, you mentioned that I love how you framed it. Like, so from the seeds that, that we're having right now, like, what do you see now that you haven't seen before probably? Like, what do you think changed in the corporate adoption? Like, here, like now in 2025, and what do you think? Like, what do you see? Like, it's gonna move, like in the foreseeable, I don't know, like 4 to 5 years. Especially, I think it's very important for the people who are very curious about stablecoins, especially after like Clarity Act, Genius Acts, right, are coming through, but they still don't know what to do, where to look after.
So, yeah, I think stablecoins are kind of the gateway drug to crypto. Would be my next line. Because they are the ones that enable, as tokenized cash, they enable you to think about all the other things that could be tokenized. Because behind a stablecoin is really, you can think of it as like a money market fund, right? So, hey, if I can tokenize this money market fund and I can spend against it, what else could you do? And so what's going to come next, that's where you think about, all right, how do we tokenize public securities? How do we take what otherwise would be a fund? And the reason I talk about funds and ETFs is like, they're very difficult subscription processes. It's like eating glass. Now, in that same way, right, of like, why are people opting to invest via Legion? Why is so much money pouring in? Well, because now you can do it in like a couple clicks. And we can still build in the same legal disclosures. We can still do this in a really compliant way. It's just a better UX. So like the rails are 10 times better. Now the UX is catching up to becoming 10 times better. So stablecoins, I think, helped us envision of like, what else can we do with this technology? And that's why I feel you needed the Trump administration to come in. You needed Genius Act to kick off what we think is going to be just an entire boom in this industry. And so, yeah, some people are going to go back and compete over the blockchains, and the corporates are doing that today. But, we think the real opportunity is going to be at the middleware and distribution layer around payments and tokenized assets. So that's really where we're going. In terms of stablecoins themselves, I think they're going to be the core layer for consumer and business payments. But we have to respect the infrastructure that's already built. So you'll hear people come out often and say like, stablecoins are faster, they're cheaper. Sure, if you know the counterparty, they absolutely are. If I was going to send you money right now, like, yeah, they're fast, cheap, free, they're great. But if I'm paying you, or maybe you're paying, a podcast studio to rent and there's an unknown counterparty there in the middle, they're not always the fastest, especially if you need to move that overseas. There are certain corridors where we've just built up really, really robust infrastructure. And so stablecoins can augment that, but they're not a perfect solution today. So we think there's an opportunity to really kind of mirror those two worlds and have systems that connect. So while we build up better infrastructure around stablecoins, faster blockchains, really kind of off-ramps for those folks to get back into their local currencies, we have a really interesting investment around that we can talk about called Czar. That kind of kicks off the flywheel even further, where it doesn't become a parallel route really to move money. It's the same. It feels like the same. And that's where we're going, which is you're going to log into your account. It's just going to say US dollars. But under the hood, it's going to be a bunch of stable coins.
And people would not even care because as you mentioned,
I don't think they should.
Clearing and everything will be so seamless that it's the same as like right now. You're looking at your Bank of America or Chase account. Like you don't really care.
Those dollars are fungible, right?
Yeah, exactly.
What's interesting though is that actually today we have kind of set up an environment where like a JP Morgan dollar is not fungible with a Bank of America dollar. Yeah, so that is kind of like why we've invested in things like clearing, like why we think, you need not just the stable coins to be fungible, they need to actually be able to be fungible with fiat.
Yes.
And you need that to be accepted in institutions, which is why you would need clearing. And it's kind of funny because the best way to align incentives around that is interchange, which is like the existing business model for how the payments world works. It's what Visa introduced. So yeah, you're going to see a lot of people challenge that in a stablecoin forward infrastructure, leverage what Circle, Tether, and all these different corporate chains are going to go out and try to build. But then because they're solely focused on their networks and their networks alone, there's an opportunity to create connective tissue between them. And yeah, clearing is the best way to do that.
What do you think is other, I would say, avenues that are missing right now in the entire infrastructure in the middleware?
Well, kind of on that same note, if, people today, especially who really want to use stablecoins, they're often in really cash-heavy societies where maybe credit is unavailable, but it's really easy to get a crypto wallet or just a wallet. And so now they've gotten access to stablecoins. They still need to move back into cash and vice versa. So we made an investment in a company called Czar, very much focused on the global south. You could think of them as like Uber for stablecoins. There's this network of local corner stores who act as merchants who today already enable you to swap local currencies like Pakistani rupees for cash or Colombian pesos for cash. And now, or for US dollars rather, and now you can just scan a QR code, hand over Pakistani rupees and get USDC or USDT. And why is that fundamentally a better product? Well, you don't have to store cash under your mattress. You can hold digital cash in your wallet. You can then have a card and you can choose to spend against that or you can save. And the magic of all this is when you can access DeFi, because now you have internet native competitive markets around rates. And it's the same thing that Czar is enabling, right? My partner Juan is Colombian, his mom goes to the same corner store. They don't know if like that's the best rate, in Bogota. Like it could be that the guy 4 stores down is, and we don't have like markets that are perfectly clear to us. And so, yeah, the market rate is going to be published on blockchains and you're going to be able to see an exchange in just a completely different way. But then the cool part is like when you get to earn, when you get to spend, when you get to send this money, and we already know these remittance networks are huge. So they're increasingly becoming dollar denominated and stablecoin denominated. But in turn, you're going to see those same people who are dealing in local cash probably also dealing in local stablecoins. And so this is just, kind of an early part of the flywheel, but if we ignore those people and we just give them stable coins, but they don't have the on and off ramps, and it's not done in a way that is natural to their already existing consumer behavior, that inhibits scaling.
Yeah, I couldn't agree more. I think this is the fuel. How a lot of people will probably interact the first time with crypto. Like that's coming to this level,
and they'll hear it's a digital dollar,
yes.
right? That it's not like something that's hard to understand. It's just you want access to dollars. Great. What if you don't have to go stuff this somewhere. You can just hold it on your phone.
Oh yeah, and I totally I think the digitization or overall tokenization of short-term treasury bills or any other DeFi products that will allow you to get from very secure 4% to maybe up to 6 to 9%. We also work with we partner with Maple Finance as well, right?
Oh, love Maple, yeah.
Exactly, big fan. And I think people don't realize it's not always about the yield. It's also about the preservation. I'm coming from Ukraine. Ukraine after the war lost 40% of the notional value of their currency. Why hryvnia? Why? Just because the economy is not doing well during the war, so people lost a lot of their savings, just purchasing power, right? So for them, if they would have this seamless opportunity to go in and out into stable coins and actually store money in the digital version of dollar, right, which not always, sometimes limited in countries like that, right? So then it gives you another opportunity just to preserve the value of your money. And think about Venezuela. You're talking about Colombia. Venezuela, some of their cash right now, you probably can burn the fireplaces, right?
Absolutely.
So I do believe it's a huge advantage, and a very practical one, because crypto is being criticized a lot, for not having those, killer features. I think stablecoins can be one of those killer features. But I want to talk about other verticals. I mean, obviously you're very fintech heavy given the nature of what you're investing in. But what are the other verticals you think are going to flourish, right? We have, DePins, we have layer 1, layer 2s, you have now all the different surrogates of AI agents. So talk about the things that really exciting for you and you think that they are undervalued and maybe in 5 years they're going to blow up.
Oof, that's a good question. Well, we're not really investing in layer 1s or layer 2s.
Yes.
I actually would take the opposite, where I think a lot of things in crypto are overvalued just based on narrative. We're very excited about DePin. I love meeting DePin founders because they're so practical. They start really by building a business and solving a problem and then taking all the magic of blockchains and applying that to their networks. They tend to be some of the more principled, right? Because some other parts of crypto, you can sell this kind of vision and this narrative, and you can't really do that when you have some sort of hardware network. So we've invested in companies like Dawn, who are creating a decentralized broadband network. Very excited about what they're doing and what they can do for users. They can cut your Wi-Fi bill in half. They can turn your home into a data center, and they actually become kind of a DePin mining rig, if you will, and that they become the distribution center for all these other different DePin projects. So they just released a product called the Black Box, which I bought the biggest rig that they have, and you can use it across pretty much any DeFi project or DePin project, as well as actually supply compute to some of these compute marketplaces. So I think that's super cool.
Can I replace my Xfinity account?
Yeah, I'll put you in touch. Yeah, we'll get you a reference code. And then, yeah, we're very excited about AI. I mean, how can you not be? I think that we have just tried to be super disciplined around the category because it is very narrative driven because of the success of AI. But it still reminds me, the AI world versus the crypto AI world reminds me a lot of that Mad Men meme where it's I don't think about you at all. I don't think really the AI world knows that crypto AI exists, but it's really hard to argue with why crypto and AI shouldn't be a perfect marriage, right? We're going to have all these issues around, deep fakes, bots.
They already happen.
How do you have human, how do you verify that this is a human versus an agent? Obviously, stablecoins and these new networks that we're building on very fast and cheap blockchains are kind of a perfect environment for agentic commerce. And then separately, compute is the new oil of the internet. And blockchains, again, are really good at coordinating economic activity. So if we assume there's going to be this huge boom in compute, having a blockchain-based marketplace for that makes a lot of sense. So we've made 2 public investments today in and around crypto and AI. Oh, sorry, actually, only one that we've publicly announced. We've made 2 investments, and we're looking at a third. The one that we haven't talked about that I'll just briefly touch on is a compute marketplace. It's founded by an ex-OpenAI team. And maybe just one quick comment on that. I think from a talent perspective, what we're seeing in crypto today is unparalleled to what we've had before. Not to say that we're not excited about kind of the more crypto native founders, but we're excited about the teams that are coming in that are like Visa, Stripe, OpenAI, folks leaving Circle and Coinbase, et cetera, to start new businesses, and that can bridge both sides of that world. And so this team, we've been watching Compute Marketplace for a while. They really struggle on the demand side. There's generally a solid supply of compute. It's like, can you go secure a deal with OpenAI? And this team kind of felt like, wow, yeah, I think that they could. So we want to back those types of founders. And then we're very excited about the idea of like compute as a financial asset. And, again, if look what's going on with, the depreciation of these assets, what's going on with the spot prices of these hourly rates. Like, you might want to hedge these opportunities. You might want to trade this. It starts to look a lot like a commodity.
Yeah.
And one day it probably will be a commodity. And on the back of that, you have these incredible new ecosystems and pieces of infrastructure like Hyperliquid and HIP3 and the idea of perps. Perps are a phenomenal instrument for trading and hedging compute. So we're excited about kind of the convergence of those things. And then I would say in the last piece, like we're very excited about decentralized kind of and shared intelligence. Like DeepSeek was a real kind of aha moment where everyone was like, whoa, where did this thing come from? Right? And it's starting to show that like, yes, well, there's a few problems. Like you probably don't want to centralize the future of AI in the hands of a few. But separately, DeepSeek showed that like models and this new form of intelligence can come out of anywhere. And so again, if we can coordinate people on the internet to actually start to solve these problems and create models together and source talent from anywhere, because talent is borderless and talent is inherently internet native or increasingly internet native, that's a really powerful combo. And so we made an investment recently in a company called Crunch that's built that marketplace. It's about 10,000 data scientists, about 1,500 PhDs.
Wow.
That are solving machine learning problems. Super cool.
Where are they from?
They're based out of New York, actually.
Oh, wow.
Yeah.
We should have them here.
Yeah, you should have John and Peter on. They're amazing. We announced it a couple weeks ago. It was us, Galaxy, Fabric, Road Capital. So really, really awesome group. So yeah, we have to be selective because, I'm very bullish. We're all very bullish on the idea of agents and AI increasingly taking over a lot of the work that we do. I mean, we use AI tools every single day.
Are you bullish in DeFi? Since you mentioned like about the PhDs and everything,
I haven't spent as much time in DeFi.
You haven't spent time in decentralized science, seriously.
No.
Like, I don't believe that.
No, I mean, listen, we're a 2-person team. We're very thesis driven. And like, I'll spend time on anything. So I'll definitely take time to learn about it. But, there's a lot of categories that we might just say, you know what, we're not going to be the best at this. And that's okay. Because we're so confident in these categories. So like, let's go win the best deals here, here, and here. And let's be competitive here too. But that might mean the sacrifice that like we're not going to be generalists, and that's okay to us.
Yeah, and if we would, I would say, summarize, like you already heard a lot about your investment thesis. We understand that you love the convergence of like traditional teams / crypto natives. Like, what are your typical checks? Like people want to know, like if what do you want?
We write $1 million checks. Think about it that way. We
Got
try
it.
to be we want to be first few rounds.
So
in a company.
You're happy to lead the round.
Yeah,
right?
yeah. Yeah,
perfect.
We love leading.
So,
we love building. I guess the way we think about getting behind a team is not just like, here's $1 million, good luck. It's kind of like, here's $1 million. How can we build like a mafia around you for your cap table? How can we get all the right people? And so we try to think very deeply, like who's the right person to call to maybe come in and co-lead with us? Who are the right kind of few strategics that can help this company go to market? And what parts of the team do we need to augment? Like, do they have a good designer? Have they thought deeply about what the brand is? How we kind of communicate that value prop? Is there a technical person on the team missing? So, yeah, generally when we're leading, we like to kind of, bring in as many people as we can that can really help the company go from 0 to 1.
Is there a geographical restriction?
No.
So
No.
you're happy, let's say, with the teams that are also distributed, right?
Yeah. I would say increasingly the trend actually, and this has played very well for us since we're based out of New York, is that, well, I'm based in New York, Juan's in Miami. But increasingly New York has kind of been the central hub. So even if they're distributed, they tend to pass through here quite a bit, at least like once a quarter. And so we try to open up our office to them whenever they want to. And it's convenient because when people come through, they're generally fundraising here. But it's okay. Like we have teams that are based in Europe. We have teams that right now are in Asia. We have a team right now who just went to Africa to expand into a new market. They'll come back at some point.
Nice.
So yeah, it doesn't matter. I mean, I think working remotely has totally changed this. Although again, they're as teams scale, I have seen they generally do come back to having some sort of office together at some point. But in the initial go-to-market, it's whatever makes sense for the company.
And then, like, obviously you can go like the pre-seed round, seed, maybe Series A, right? You know that, and then you have other verticals where you can send them to the
We have other funds internally that can help.
Right?
Yeah.
And what are the other, like, I don't know, any other red flags that you would say, like, I don't know, higher valuation, I don't know, some other, like, you know, challenges that you've occurred that I would say, if I were to ask you top 3 red flags that are very common and then they're repeating itself.
Top 3 red flag. 1, poor design. I think it was something that people got away with years ago because it was like, hey, well, we can't really advertise, can't put this in the app store.
So you're talking about UI UX.
UI UX, yeah.
Okay.
Poor design. And poor design generally is also around like poor brand. I would say maybe that's the second part of just like not being able to communicate like what your value prop is, thinking too granular about a product. So people will often be selling something that is actually consumer or business facing, but overselling the infrastructure. Not that the infrastructure doesn't matter, but it's your ability to then go actually sell that product to somebody else and develop that narrative and that value prop. And then, yeah, maybe on that point, like there is an overselling in the industry on just narrative of like, you know, there's something I personally hate is this whole FOMO thing of like, you know, we're going to close the round tomorrow. Like, let me know if you're in. I don't think I've ever passed on a deal where someone's given me a tight time frame and it's worked out. Yeah. Never. The best founders know, like if I'm sitting across from somebody who can impact my business, I'll give them the time to make their decision and I'll equip them with as much information as I can so they can get up to speed. So this happened recently. Actually, Crunch is a great example. We came really late into that process. We met them. Juan flew in from Miami. We all sat down at our office together. We realized we all really like each other and we want to make it work. And we were like, okay, give us all the materials. We're going to like shift some meetings back and we're just going to go dive in super hard. We're going to have some questions for you because we're not going to get this on the first try. But if you guys are willing to commit to that, we will commit to it. And our goal is to get $1 million into this company as fast as we can. And we did. And so I think, it goes both ways. I'm not here to waste your time. I want to be respectful of your time. When I pass, I want to tell you why. I'm not going to lie to you. And do that in the most respectful way, because the reality is like, there are some teams too, I'll meet and I'll be like, this is super cool, but like, I'm not the right partner for you. Yeah. Right? Like I'm very focused on this thesis and I only have $40 million. So I have to chop it up in these ways. Maybe you're too late, which happens a bunch. Meet teams are raising 100 and 150 and it's like, man, if I
$150 million valuation.
Yeah. But they might be like Series A's or later, right? They're raising 15, 20 million. And I saw this a lot with our prior portfolio. We had teams, the Rain team recently has raised a $57 million Series B from Sapphire. Like, so excited for them. A lot of coworkers of mine are now there. We were, first round into that team. So like, yeah, bummer. I wish I had it in this fund, but I don't, and that's okay. So that means you just have to know, like, it's not about going out there and trying to find another team doing the exact same thing. It's like you have to go hunt in a different area, and you have to really kind of battle test your thesis around that.
So the fastest time frame were in Crunch. How long did it take you from the first meeting to when the money were already in the bank, hard committed?
Well, let's put the money part of it because I don't get to control the operations of VanEck, but I would say like meeting to, coming to saying yes, probably like a little over, maybe it was a week and a half, 2 weeks max, something like that.
Wow.
Like
that's actually pretty fast. And the typical one would be like 3 to 4 weeks, or how long?
It can be faster. Again, so I think there's a few opportunities we're chasing right now where like we're totally fine meeting somebody like well before their fundraising. And actually, we love getting to know people well before their fundraising, where it's like, hey guys, I might fundraise in 3 months. It's like, cool. Well, we love what you're doing. Are you willing to like take time to get to know us? And also, can we connect you to the VanEck team? Because like they're trying to build around this product suite. Can we connect you to some other partners that we've met through our portfolio companies? And it's worked really well.
So if you were to summarize it, what would be the good idea? What's the best time frame before you actually ship the product and they want to fundraise? So it would be like 3 months before they should approach you?
So it totally depends. Like the Czar team, for example, and this is all down to like the founder, their ability to communicate. I saw a video of Brandon speaking at Solana Breakpoint about Czar, this merchant network, and this neobank that he was going to build on top of Solana. And I was just like, I got to get in contact with this guy. Sent him a message on Twitter. Later that day, Pranav, who runs our liquid fund, hits me up and goes, I don't know if you saw this video, but I just reached out to this guy on Twitter and he just responded to me and it was Brandon. And so we set up a group call between our two funds. And that was one where we hung up and we just said, we got to get into this company. And so Juan was in Miami, Brandon was in Miami. The next day they spent 3 hours together, face to face, right? He called me and he's like, all right, we're going to do this. And so that was like 24 hours. We got to a point where we were like, we want to be in this company. And then we reached out to our network. We ended up talking to folks like Dragonfly who came in and led it. But we really, I think, we tried to partner with Brandon and really serve as a reference there. Mm-hmm. So it can be super fast, but he had no really kind of an idea of the product, but it was just Brandon previously built and sold the largest fintech company in Pakistan. He had a track record. He was a really clear communicator. He designed a wonderful deck. And so like all of our questions were really around execution, next steps, how we're thinking about evolving the business model over time, right? If you could sit down for 3 hours and just go back and forth, sometimes I've heard this a bunch where like, you want to be able to like do a really long road trip with each other and like still get along. And I like kind of agree. If we're going to be able to spend 3 hours together and be excited about working together, we should work together. And sometimes, so again, there's no perfect thing, right? You should reach out at any time. But if you've never built something, if you've like, don't really have a clear concept yet, or you don't know how it's going to monetize into a business, you should pare back maybe what that ask looks like, right? Like, hey, I want to get to know you, but I'm just going to raise a pre-seed round for $500K, test this out. Like, you have to be conscious of your surroundings, what people are doing. And sometimes what you see instead is like, we're raising $10 million and we're pre-product and we're going to do it at some insane. And that sometimes it's just like, okay, so no, we'll wait.
Very, very easy.
We'll wait and we'll see if you build a product. And if you do, we'll be around.
What is the best way where should they reach you? Twitter, LinkedIn, email?
I think Twitter's best. I'm trying to get Twitter under control, but it's the bots there are insane. But so you can always shoot me a message on Twitter. Definitely not LinkedIn. I don't check it, considering deleting it.
Do you remember the best pitch ever that you had on Twitter?
The best pitch ever.
How did it sound to you? Like, so that you're something like, wow, I want to talk to this person.
I wonder if I've actually done any. I don't think I've ever done an investment off of Twitter, to be honest.
So you're saying that because you see that all sounds great. If I will interject so you're talking about the founders that are like seasoned founders, so serial entrepreneurs, which is like
not always the case.
Not always the case, but you're talking about them. So it's a little, to be fair, it's a little bit easier for them to raise money because first of all, they went through the pain from A to Z. They already know the process. They know how you think. So they kind of simplify life for you, right? Answering and modeling the deck so that it will answer all your basic questions. Now, if you're talking about the first-time founder, they're like kids sometimes, babies. They're clueless. They need help. They literally need to be held by the hand and tell what to do. So
not always though.
Not always, but a lot of times. Yeah. And then even if they don't think they eventually it might be the case that they will understand from the feedback, from the honest and constructive criticisms that this is how they should have done that. So my question to you is also what would you advise? How do you to do that for the first time founder, right? So again, they're writing on Twitter, they don't know, they're nervous what to do, how to address to you, they already created an MVP, they want to showcase to you the perfect way to pitch.
I would actually reference, there's a post by John Woo about this exact topic. I'll send it to you after this. Perfect. Of just hey, if you're going to send this out, don't start with the yo, what up, dude? And then just talk about random things. Get to it. I'm building this thing. here it is. It's a really easy link. You can click it. You can see it. This is my vision. This is my thesis. Like, can we grab time? Happy to find time, right? Like, make it punchy, make it tight, get to the point, and make it really, really clear. And also think about the timing of this, right? Like, I just went to Singapore and we had a walk with a first-time founder, 2 first-time founders actually. And, they're building a really interesting company. And it was funny because before the call, I like, they had Gmail accounts. So I was like, Juan, who are these people? Like, I kept forgetting the meetings. We had so many meetings. And he was, at first he's kind of like, all right, if you're busy, it's all right. You don't have to make it. I was like, no, I want to be at every meeting we have with founders. And after we ended the meeting, I was like, that was my favorite one. He's like, what? Get out of here. Like, first-time founders building in this like kind of new space that like we have an emerging thesis on, but like we don't really know a lot about. And I was like, you know what? It was just like their energy. Like they had great answers. And when they didn't know something, they didn't fake it. They're like, you know what? That's a really good question. We've been thinking deeply about it. Here's where we're at. We're not there yet, but I'll follow up next week. And every single thing they keep following up on. And every question we have that they can't perfectly answer, they're like, you know what? We're digging on it. We're already like, so we have a working doc with them. And again, that kind of back and forth, it's kind of like, that car ride. Like, you're starting to realize like, all right, these guys are really, really deep thinkers. They've never built a business before. So we kind of know where we might need to hold their hand, but we're also upfront about it. So we're like right out of the gate, like, do you guys have a good designer? Do you have a good brand? Like, and immediately, like, every time we chat with them, those issues are like slowly getting solved. So that's the process we like to have. And again, it starts with something really clear and concise. They cold outreach to Juan and sent him a really nice, like, very clear, I'm building this, take a look. They clicked it. Perfect. And he was like, this is really cool.
So be bold and just try out and then
be bold, be concise.
Yes.
But also like take advantage of it, right? Crypto has a lot of conferences. Yeah. And so if I can get you face to face, that is better. Always right? Because I can sit across the table, we can go on a walk, we can talk about this, you can pitch me, and I get to know you because I can look you in the eye. That's important. So a lot of people, they'll just optimize for a phone call and, it's a half-baked idea. And, or sometimes founders will just say like, I want your feedback, right? It's like, we're 2 people. We get pitched a lot of companies. So we have to kind of focus our attention. I don't always have time to get on a 45-minute call to do a product review. Because I have my own companies.
So this is exactly. So this is how not to do it.
That's how not to do it. Yes.
Perfect. So now let's go to the Blitz. I promise you. Like, so the trick here, you have to reply fast and not to think too much.
All right.
Not to overthink. So you're not allowed to have like a long, like, deep dive and think, oh, this is correct. No. Right, very intuitive. Okay.
That's why I don't like to prepare for these things, so I can actually like, my brain's ready.
That's beautiful. So here we go. Most overhyped narrative in crypto VC right now?
AI.
Most underappreciated risk?
Underappreciated risk?
Yes.
I would say right now what's going on in a lot of these tokenized funds, they're under-communicating basically long-duration assets that are being packaged in some sort of like stablecoin vault. And I think a lot of users don't understand that they're investing in a private credit fund that is illiquid. And I think the best this is an awesome new way to create tokenized assets. The best founders are going to be the ones who are going to be able to communicate how they're creating liquidity around these things that are traditionally illiquid. Those could be any kind of credit fund, but they're becoming a huge, huge product.
Token versus equity. What's giving better DPI today?
It's still tokens, I think, but I'm excited to see more equity companies. Like, I think Circle's IPO, the rise of Coinbase and Robinhood the past couple of years, Stripe, right? That's showing people you can still build an equity business. Long term, I'm very excited about what tokenized equities will do for crypto companies. And so the convergence of token and equities is happening in real time. I think the next couple of years with the laws that the SEC, Crypto Task Force, and Trump administration have kind of alluded to could lead us to actually having a world where like tokens have more value and equities are more programmable.
Perfect. Biggest founder red flag for you?
I think we talked about it, but probably brand. Like an underemphasis on brand and product.
That's what you're talking about, the company itself. What about the personal? Like, let me rephrase it.
Personal?
Yeah.
I don't know if I have one thing, but okay, maybe FOMO. Someone trying to FOMO you.
Got it. Perfect. One regulation you'd fix instantly if you could.
Easiest answer, the non-accredited investor rule.
And in this case, I will ask you why it's important.
You can gamble your life savings away today, right?
Mm-hmm.
And you can't invest in the most promising early stage companies. The problem there is that we still have a disclosure issue. You should know what you're investing in and why. It's the same problem I had with what's going on with some of these kind of private credit products.
Mm-hmm.
But everyone should be able to have access with proper disclosure such that there is no information asymmetry. And so that's what we're trying to do with Legion. And if you do that, then, and Robinhood's trying to do this, I think it's just going to be really exciting because companies are going to take all the principles of tokens and ICOs and airdrops. They're going to do it with equity as well.
In a compliant way. Yeah.
In a compliant way. So and by the way, these rules really suck because you can only raise up to 5 million, or you can do tons of legal work to raise 75 million. Reg A Plus is just short of like filing an S1, which for an early stage company, you don't have the legal resources to do.
One moonshot you haven't funded yet, but secretly want to.
I'm very excited about somebody who can build a mobile app for me to buy all these new tokenized assets that are going to happen. Like, I really think you're going to have a boom of different assets. Some are going to be, these new vault products that tokenize existing assets. Some of them are going to look like what Athena did, be more crypto native. Some of them are going to be user generated. Like, again, we come back to this idea of like perfect competition on the internet. DeFi and wallets, like they're going to enable us to see who these investors are, to follow them, to invest in their funds. People are going to take a VanEck ETF and remix it with a BlackRock ETF, like things you could never do before.
Mm-hmm.
And I want an app to invest in that.
Wow, that sounds amazing. I would invest in that.
I've thought about incubating it, but I can't. I don't have time.
One book that changed your life.
Taipan. It's a book by James Clavell. He's the author of Shogun. I've just loved the history of Hong Kong, and it was kind of, what inspired me to go on my own personal adventure and just be really curious about the world. And, I ended up going to Hong Kong. I've lived there twice. So it's a book about the founding of Hong Kong.
Mm-hmm.
And, it's just been really inspirational.
I told you I have an episode with Wyatt last
Yeah.
time. So now that you're the second person. Everybody's shit in Hong Kong. Oh my God, we should.
I'm a huge Hong Kong history buff.
So one last question, which I never notify people, and that specifically I didn't send you in the lineup.
I barely read any of the questions anyway. I like to wing it.
So what is the purpose of life to you, Wyatt?
I think it's just to pursue interesting things, regardless of what they are. I don't really believe in a career path. Again, I joke, if I had a memoir, it'd be from bike chains to blockchains. It's wherever the wind takes me, I go where it's interesting. I don't believe that anything is out of reach. And so, in 2017, I listened to a podcast and it was actually with Chris Sacca, and I was like, holy shit, I want to be a venture capitalist. I had no really idea why, other than that kind of pursuing that, adventure of just being intellectually curious all the time and meeting all these different founders, because I love the idea of building things. And it just never seemed far-fetched. You just keep going, and eventually one day you stumble into running a corporate venture fund, you stumble into meeting the VanEck team, and they want you to run a fund there, and you just keep going. So I'm also now a dad, and that has been a hugely important experience. And as I think about raising kids, it's the same thing. I would never tell them pursue a career. I would just say pursue curiosity, pursue adventure. And that's what life's about to me.
One advice to your younger self?
I don't think I'd change anything. I don't think I'd have any advice to myself. No. Maybe no.
Nothing.
I think you have to go through, I had a lot of turbulence. Seed Invest was an amazing thing. Circle almost went under at one point. We were launching this product. We didn't every bad thing that ever happened to me was the biggest blessing. And so, maybe if I could give myself a piece of advice, it would just be keep going, because I genuinely think everything happens for a reason.
And how do you want to be remembered? Last question.
I don't care to be remembered. I think the only people I want to be remembered by are my family and my friends. I don't care for personal legacy.
You're very humble, very selfless. I love about you. You're also, I really appreciate that You're one of those people who are not just investing, but you've been an operator yourself, and you're coming from a genuine desire to change the world, genuine curiosity, which is great. You're not just like spray and pray. You're very like, like you have to have a high conviction in a project, and you support them a lot. There's very few VCs like that, by the way. Like, so I really applaud you for doing that. Like, I'm really wishing you success.
Thank you.
And more unicorns. So,
Let's hope so.
thank you for what you're doing. Thank you, Wyatt.
Thank you for having me.